Welcome back to more Alpha Lines. It's your boy Wild Ziv, and today we're gonna go over why your order blocks are not holding and which is the right order block to choose. Because I've been getting a lot of messages on Telegram telling me, "Oh Ziv, why is my order block not holding? Ziv, I'm getting stopped out. Why is my supply and demand stopping me out? The supply and demands I choose are stopping me out." I'm getting a lot of questions. Ziv, which one do I choose? So I'm gonna give you guys I'm gonna show you guys how and why you're getting stopped out here, here. This one held, why it held, and why you're getting stopped out here. Okay, so we're gonna start off in the monthly chart here, but before we actually get into the video, I'm gonna plug my Telegram real quick, guys. So it's called Smart Alpha Lines, the same brand. Oh, not right now. Okay, so same brand, as you guys can see. Me and Newbie been killing it this week. Just last week alone, we had over 40% gain. Like, you guys could literally go over all of this. Like, look at these trades I send, like with the description. You guys could go all the way and see for yourself. We had over 40% gain just that week alone. If you don't believe me, join. It's in the description. It's for free. Go check it out yourself. And we just send ideas for free so you guys could learn and eat at the same time, because we give a description with the idea we sent. Okay, so we're starting off with the monthly time frame here, and this, just because it's the monthly time frame, it doesn't mean it's different on the lower time frame. It doesn't mean it's different on daily. It doesn't mean it's different on the hour or the 4 hour or the minutes or the seconds. Okay, this is the same. This is market structure and order flow. These, I have keywords here, you guys, because we're going to be using to determine why and which is the best order block to choose, or which ones will hold also. So keywords here we're going to be using today. Okay, it's the order flow, the institutional order flow, and the market structure are the same for every single time frame. So do not get confused just because I'm on the higher time frame. I'm doing it because it's more clear here to show you guys the example. So on the monthly, you guys can see we had a high, and then we broke structure to the downside. Boom, we got a lower low, lower high, then we got a lower low, breaks that wick, closes below that wick, then we got right here a break market structure, then we form a higher high, then we come down, we form a higher low. That's what we expect, because we've just formed a higher high, we want higher low. So that's a shift in market structure. You could call that shift in market structure right there. Okay, then we are looking for, we're going to drop down to the weekly time frame. Here we go. It breaks structure to the upside into this order block. Since we're bearish, we expect to go down. So what do we see right here? BOS, break market structure, and we expect this order block to hold. Looking for Wyckoff and more confirmations, which is on lower time frames, break market structures and entering off the retest and riding it all the way down, or to the next key level, wherever you want to hold it till. So why, if you ask me why would I enter this? Because we just rejected off this whole order block right here. We're rejecting, as you can see, and then we drop, we break the whole structure. Then I would enter off more confirmations on the lower time frame. Then we do the same thing. We keep breaking, comes back, tests, drops, and people here think these order blocks, as you can see, this held. Why? Simply because there's more orders to mitigate in here. So it mitigates these. Stop punch this right here. So essentially this could have held right here, but this order block, people would expect this to hold also. Why? Because they think it will, I don't know why they think, but they really just set a limit and they enter to see their stop loss getting hit right here, as you guys can see, and then they get confused. Why are you getting confused? You shouldn't get confused. You just need to follow institutional order flow. What do we have? Lower low, lower high, lower low, lower high, lower low, lower high, lower low. So why would you want this to hold? Right here we have lower low, lower high, then we break lower low. As you can see, people will enter off this right here, and that would have held. Why? Because this order block right here, this tiny refined order block, was the whole move to the upside to mitigate these orders right here. So that was a strong order block. You could have been watching on any time frame, not only the monthly. So as you could see, it came. You could look for confirmations. Boom, then goes up to the upside, and what does it do? It stop hunts. It does not break market structure. If it was to close like this, close above this, and on the monthly you don't see wick, you see a nice good closing above this high right here, then guess what? That is a break market structure. But this is simply a stop hunter. You can't just consider this a BOS, break market structure. Then what people expect is right here. Let me really quickly. People expect, they draw their order block, set a limit, they don't look for any confirmations, boom, then they expect this to hold. Why is my order block not holding? Because not only this was a stop hunt, there was equal lows right here, there was equal lows forming right here. We could draw it right here. We got equal lows forming here, we got equal lows forming here, we got equal lows here, and as you can see, this single wick came and took those equal lows, just barely took all of those. Liquidity under here, resting here, it's resting here, sell side liquidity right here across those past equal lows. So not only there's a stop hunt, there's also liquidity that price wants to take out before making that move up. Why I literally gave you guys a simple explanation, because there was a stop hunt. It's not a break market structure. On top of that, we are in a bearish trend right now. We got lower lows, lower high, lower lows, lower high, oh my bad, lower high, lower lows, lower high, then we got a lower low, then we form a lower high, then we form a lower low. Would you expect this order block right here, would you expect this order block to hold right here? You got 3 seconds to answer. The answer is right there in your guys' screen. 3, 2, 1. Yes. Why? Because we're on a bearish trend. Lower low, lower high, lower low, lower high, lower low, lower low, lower high, and then we would expect a lower low. But what happened? Another stop hunt right here. Stop hunt. That didn't break structure. So what do we look for? Another. I don't know why my page just moved on a bit, but then what happened? Price formed a new structure right here. Let's delete this. Let's delete this. Boom. Break in market structure. It breaks, so you could enter off this order block right here. Boom. Why? It formed structure, came down to test the unmitigated areas of that stop hunt, broke structure to the upside, came to test it. Now we are shifting in market structure to the upside. We broke, so you see right here, we broke structure, we came down to test it. Now we have a shift in market structure, so we are bullish now. So what happens after a while? You see price, boom, taking off to the upside. It's really simple steps you need to follow. It's just order flow, institutional order flow, and market structure. Otherwise, your order blocks are not going to hold. Like, you could just draw order blocks all over the place. Like one right here, you're going to get stopped out. One right here, like I don't know where else. Like, you could draw this order block thinking this is going to come and bounce and go up, but what happens is it comes down and breaks it. But this is a clean example right here. You could do this on every single time frame. This is not, I'm doing this because it's easier to see on the higher time frames. So you see lower, let me get rid of that. So we got a lower low, lower high, lower low, lower high, lower low, lower high, lower low. Then we got a lower high. So we expect the market to form that lower low now, lower low. But guess what? It doesn't break this structure right here. It stop hunts it with that wick. We could tell stop hunt, moves up, builds structure, comes down, tests unmitigated areas right here, tests unmitigated spots right here, goes up, breaks that structure. Now it's your cue to look for Wyckoff and minor breaks of structures and on the lower time frames and enter. What happens? Break structure there. You gotta enter off there now. You got a second entry. Boom, boom. Like, it's just repeating itself, guys. Markets fractal. You need to train your eyes to see all of this. Like, it's really simple. See, like, it's really fractal. Like, look at this. We got equal lows here. We got equal lows here. We got sell side liquidity right here. So price wants to take those out before moving, shifting price to a bullish market. Okay guys, this is a simple video. If you guys want more of these videos, I can make a 2.0 of this, but in deeper and live charts or on lower time frames, whatever you guys want, even though it's the same on higher and lower time frames, but I could do it for you guys. But yeah, that's it for today's video. I will bring more breakdowns for you guys. And yeah, I hope y'all enjoyed it. Please like, comment, subscribe. It's your boy Wild Ziv, and peace.